I'm expecting gold to jump around within $500 of where it is right now for the next year. The number of companies being financed is down 13%. So we're seeing more money going to fewer companies, which tells you that I guess the cream of the top are getting financed, whereas the suspect ones, the not so good companies or projects, are still struggling.
There's one stock that you like.
All right, this is a larger stock.
I'm very pleased to welcome back to the show Brent Cook, one of the founders of Exploration Insights, now senior advisor. He's an economic geologist, and he's going to go over how to pick mining stocks in today's economy. Welcome back to the show, Brent. It's always good to see you. It's been a while. Pleasure to have you.
Likewise, David. I appreciate the opportunity.
I appreciate the opportunity to have you on the show as a guest. We missed you at the Rule Symposium. I wasn't able to attend the last day due to me getting a fever. I was telling you offline. So I was looking forward to catching up with you on the Zoom call. The sentiment at the Rule Symposium was very good, despite the fact that I felt that the sentiment overall in the mining sector is a lot more dismal compared to last year. Recall that around October, November, when gold was trading around the same time, around the same price rather as right now, which is about $4,000, the sentiment was a complete 180, meaning it was euphoric on the way up, and now everyone's super cautious just because gold pulled back from $5,000. Are you feeling that right now, or is that just me?
No, that's certainly what I'm seeing out there as well, and it makes sense when your stocks are going up and the gold price looks good. People get enthusiastic and buy. When it's declining, depression sets in, and they become cautious and sell. I think that's just human nature, which is kind of odd. I think Rick uses this analogy where someone's wife goes to the store and won't buy the tuna because it's too expensive, and then next week it's a third off and she'll buy it, whereas her husband does the opposite when it comes to buying stocks. I think that's kind of what we're seeing.
Yeah, fair enough. The miners right now, though, are they taking a step back at maybe postponing some of the operations or plans for drilling or exploration that maybe a $5,000 gold environment prompted them to do right now?
Not that I'm seeing. I mean, I think what's happened in this run-up before this past couple of months is a lot of companies, I should say, a lot of money was raised. I think it's something order of $10 billion in financings to the junior side of things, and that's 2 times last year. But what's interesting is the number of companies being financed is down 13%. So we're seeing more money going to fewer companies, which tells you that I guess the cream of the top are getting financed, whereas the suspect ones, the not so good companies or projects, are still struggling. I think that's a really good sign right now. I think it's a good sign. I think it bodes well for future discoveries. And with the prices coming off, it's probably a reasonable time to start looking at leveraging into these companies, given we don't know what's going to happen for the next 6 months except chaos.
What kind of chaos?
Well, it starts with the fool in the White House. It's so uncertain out there that it's hard to make investment decisions. And, the tech sector, AI, has just gone nuts. That's taken a lot of the speculative money that might have gone into the gold stocks or was into the gold stocks. But consider the price to NAV last year was about 1.6x for mining companies, the major mining companies, and now it's down to about 0.7. So, prices have gotten better.
What were some of the most commonly asked questions to you at the last conference at the Rule Symposium?
The most common one is, what's your favorite stock?
Okay. All right. Well, we can get to that. Sure.
Which I say, go read the Exploration Insights newsletter. Although it's interesting, at the Rule Symposium, there were probably 6 companies on the floor that I owned, and that's unusual. So they're good companies there.
How would you define a good company at a time when the price of gold has fallen?
I'm still looking at the long term. I think the gold and silver and copper prices have got to go up. And I mean that over the long term, the next few years. There's a deficit in copper production coming. Gold is being purchased more and more by central banks as opposed to buying U.S. treasuries. They're selling treasuries. So I think the outlook for gold looks very strong. So I'm looking at these companies in terms of, and I focus mostly on the junior sector, who's got a project that looks like it's got the potential to becoming something large enough and high margin enough to fit into a major company's portfolio, and they're going to buy that. That's what I'm focused on. And last year, I think there were 4 companies in my portfolio that got purchased by major companies. That's kind of the goal here.
Right. Are you focused primarily on companies that are on the cusp of getting taken out, or you think you're looking more at companies that are on the cusp of producing, transitioning from an explorer to a production company themselves?
I'm more focused on the ones that are have to have an asset that is going to be purchased. I don't spend a lot of time on mining, a company going into production. That's just not my area of interest. And I'm really focused, as usual, on the exploration stage where you're looking at a 20 to 100 million market cap company that's got a project that could be worth $1 billion.
So if I were an investor entering this space, my first question that I'm asking myself is why not just focus on the seniors? Because right now the juniors are experiencing, as we discussed earlier, sort of a malaise when it comes to investor sentiment, despite the fact that gold is still at $4,000, which is at a near historic high. Now, it doesn't matter that sentiment is a little bit weaker for investment capital for the producers because they're still printing free cash flow like no tomorrow at $4,000 gold. So why be at the mercy of whimsical investor sentiment, so to speak, when I can just focus on a solid free cash flow from the large companies?
No, that's very sensible. I should be doing that as well. It's just that, I'm looking for a 10x rather than a 2x.
Yeah, I see.
But that makes perfect sense. I mean, this is what I do. But for your general investor, buy a basket of the major mining companies and gold mining companies and copper and let it ride.
Before we continue with the video, let me tell you about one of the most important problems of owning gold. So gold has been a store of value for thousands of years, for as long as people can remember, but it doesn't generate an income like many other assets. That's a problem. But that's also where today's sponsor, Monetary Metals, comes in. Monetary Metals offers investors a way to earn yield on their gold paid in physical gold. Through its leasing platform, investors can earn up to around 4% annually with yield paid monthly in ounces rather than dollars. That means your return is measured in gold itself. The gold remains your asset and can be redeemed at any time. Thousands of investors are already earning a monthly yield in gold through Monetary Metals. Visit monetary-metals.com/Lynn, link down below, or scan the QR code here to learn more and get started. And you can start earning a real yield in gold today. Well, the GDX index has fallen about, let me just get the exact number here. I think it was 35% from the top to today. Yeah, 35% exactly. Did GDXJ something similar as well? How would you evaluate valuations today versus earlier in the year?
They're much better. Although, if you're thinking in terms of 5,000 plus gold, now 4,000, so you've lost 25% of what you can sell it for and a much larger portion of your margin. They're still on a, P to NAV basis, a lot cheaper than they were.
Are companies now a more attractive M&A target now than when they were stocks were 35% or higher? I ask this because logically speaking, they should be, although from my experience talking to people, it seems like M&A seems to happen a lot when valuations are overstretched by conventional methods and prices are even higher. And so, yeah.
Historically, that's been the case in the mining sector. You see it all the time that mining companies go out and spend a lot of money on buying a company right near the top. And I think it's just, again, we go back to investor sentiment. That even goes to the board level. When things are rising, they're making more money. They'll want to buy stuff. Logically, you should buy things when they're cheap at the lower end of the scale. But then again, you're making less money as well. But logically, yes, they should be more interested in these companies than they were 6 months ago.
Can we take a look at mining activity, either financing, capital flows, deals done, or M&A as an indicator of where the gold price or silver price is at their cycle? Meaning, if we see a lot of M&A historically, that has signaled somewhat of a market top, even though perhaps the industry has changed a little bit since 2011, let's put it that way. Can we still use M&A activity as an indicator for market tops and bottoms?
I think so. And that's an interesting point. I hadn't thought of that. But most, if not the majority of acquisitions I've seen over the past year have been smart acquisitions. But when we start seeing what, stupid acquisitions or non-accretive or just acquisitions for the sake of adding ounces, that's or a symbol we're getting close to the top. At least historically, that's been the case. But so far, we've seen intelligent acquisitions, I think.
How do we know? Nobody knows for sure. But how do we pick companies that have a higher chance of being bought out? Besides reading exploration insights, which I encourage everyone to do, just give us some broad criteria that you will be looking out for. Land packages, jurisdiction, the grade, management team. What are things you look for?
Let me give you an example. I think this is a good
please.
one. Rupert Resources in Finland. They
what's the name again?
Rupert.
Rupert Resources.
ERT.
Okay.
They discovered and drilled out a very nice open pitable deposit in a great jurisdiction. No permitting issues. The one issue they had was part of the deposit went onto another company's property. That was Orion. And that was the holdup in anyone purchasing it. Agnico Eagle is active in Finland. They've got a mine there. They're set up, ready to go. So what they did was they, forced or bargained those two companies into a deal, and they acquired the whole deposit for a good price for our shareholders, but still accretive to them because they're in the country. They've got people there. It was that's a smart move. They didn't go buy something in Kazakhstan. They bought something in a country where they're working, they're comfortable with. The legislation works, et cetera, et cetera. That's the sort of acquisitions we're seeing that make sense. We saw Arizona Sonora picked up by Hudbay. Same thing. Hudbay's got a mine in Arizona. They know the place. It's a good deposit. It'd been de-risked in terms of permitting, and they acquired it. Those are the type of things we're looking for.
Does it matter to you as much that there are other producers or operators nearby in the same zone or close to a deposit?
I think that makes a big difference. Yeah, again, you don't have to go buy a property in Kazakhstan or wherever, and go establish, your workforce, your contacts with the government, with lawyers, all that sort of thing, risk analysis. You don't have to do all that.
Yeah. Do you think $4,000 gold is still a good incentive price for M&A to happen?
Yes, most definitely. Most companies are running their reserves at, $1,800 to $2,200 gold.
Okay, so you're not necessarily waiting on $5,000 to inject more capital into the space in the hopes that M&A right now is already sufficient, you think?
Yes, I think so. The issue is finding a project and company that fits in with the larger company's overall game plan.
Yeah. Let's talk about this overall game plan. Larger companies have a multi-year game plan. They have strategies for when they need to add deposits. They know when their own deposits are dwindling, and they know when they need to replenish reserves if that's part of their strategy. So ultimately, then, is M&A dependent on the price cycle of gold, or will it happen irrespective of whether or not gold will be $3,000, $4,000, or $5,000?
Well, certainly the higher gold price makes it more likely. But again, it comes down to the same thing. If you have got a smart management and board that understands what their strengths are, I guess you'll say. I mean, here's another one. G Mining bought out G2 in Guyana. G Mining's done a fantastic job in Brazil. Cash flow, great. Now they've bought into this and they're going to develop that. Smart move on their part.
$4,000 gold. Are we looking at somewhat of a market bottom here? Brent, how would you, of course nobody knows, but how would you evaluate this kind of a question?
It's tough. I mean, you've talked a lot smarter people than me on this subject. But
oh, you're very smart. Well, I'd love to pick your brain as well.
I know rocks, but I think there's a dichotomy here, or a battle going on between, does the Fed have to raise rates due to inflation, or they have to lower them because the market and the rates are killing them? It's a battle going on there. Plus, who's going to? It all comes down to what the interest rates are going to be, and what the other Federal Reserves and such bank across the U.S. or the world.
Yeah.
Are they going to be buying these treasuries, or are they going to be selling and buying gold, or what? So it's a battle. I personally, I'm expecting gold to jump around within $500 of where it is right now for the next year.
Okay. Yes, people should follow Exploration Insights, but maybe just give us one stock that you like. And just the idea here is to learn from why you like this particular stock, and then we can apply some of the same logic to do our own due diligence here.
All right. This is a larger stock, pretty high market cap. Talon, Talon.
What's the ticker?
TAL or?
I'll look
Talon.
it up. Talon Capital Corp? Talon Metals Corp.
That's
TLO.
It.
Okay.
That's TLO. So they've got a deposit that they bought in Michigan, and it's a nickel, copper, platinum, palladium sort of thing. But they've made a discovery in Minnesota that is exceptionally rich in terms of its nickel and platinum group, metal group minerals. This is, and it's all critical minerals. It all fits into that. It's in the U.S. They've organized where they're going to process that over in, I think, North Dakota. And it just seems like a great, it is a fantastic deposit. It's growing exceptionally high grade. And as your chart shows, it's come off markedly from $9. So I like this one a lot. That's when it's got everything going for it. It's got infrastructure, smart people running it. The permitting's all mostly in hand. They know where they're going to process it. It's good.
So a lot of stocks have come off from their tops from a couple months ago. Does the fact that some of these companies, the sector overall has come off from its tops, does that fact alone make you a little less stringent when it comes to picking stocks? In other words, since valuations are a little bit cheaper across the board, are you more willing to deploy capital in something that maybe you were more skeptical about when prices were higher?
Yeah, I think so. That just, again, it makes logical sense.
Right.
It makes it more interesting to me. Some of the more junior companies that are exploring, they've come off a lot. And assuming nothing's changed, the potential has gone up relative to how far they come off. But again, looking at Talon, that's come off a lot. I didn't realize it come off that much, but that's something I would be adding to.
What are some of the biggest mistakes or misconceptions about picking gold stocks that you've encountered over the many decades you've been in this space?
I think people underestimate the risk associated with a mineral resource statement. A lot of the junior companies, they put out an inferred resource, which is the less certain mineral resource estimate, suggesting that that's going to be converted to actual ore reserves. That's a long way between the two. I think the other thing people miss a lot is metal recovery, metallurgy, in that it makes a big difference if you've got a gold deposit that's oxidized versus one that is not oxidized versus one where the gold itself is tied up within arsenic or silica. Those three different categories make a huge difference in what it's going to cost to process and recover the ore. So those are the two things I think you need to really look at.
People place a lot of emphasis on picking a management team with a proven track record of developing a project or selling it. How important is that for you as a geologist?
I think management's experience and history is very important. In terms of picking someone who's successful, that really makes a lot of sense as well. However, from my point of view, that means you're going to miss out on probably the smarter, younger groups, management, that are going to make their first discovery. So although I think that makes a lot of sense, I look at something like, I don't know, Rob Carpenter with who discovered the coffee deposit up in the Yukon. He was nobody until he made that discovery, but getting to know him and seeing the results they were coming up with, I was happy putting money into something like that, even though it was he was an unknown.
So when you filter for new companies to invest in, do you look at the deposit first or the team first?
I tend to look at the property first and then the team. I know that's the opposite of what a lot of people do, but my strength is geology rather than, well, I'm pretty good at people too, but strength is mostly is what's the property look like? What's the potential? And then who's running it? Share structure. Have they set this up so that if they're successful, the share price goes up?
Have your preferences for jurisdiction changed over the years?
Oh, yeah. I mean, when I first got into this, Venezuela was a great place and Argentina sucked. Now it's the opposite way around. Bolivia has gotten better. Used to be not so good. I think Kazakhstan's on the rise. I think a lot of the countries in West Africa have gone downhill. And like Burkina Faso for 5 years was the place to go. Now it's not at all. So yeah, it changes over time.
Are you talking about availability of reserves or government support, infrastructure, capital? When you say better, what does that mean?
I guess mostly what I'm talking about is jurisdiction. How has the government changed in terms of, are they taking more of the profits? Are they changing the mining regulations to be more or less restrictive? That sort of thing.
Would there be, let's say, a jurisdiction with a premium embedded in it because maybe it's just more expensive to operate there, where the infrastructure is just better, and you would say that the premium is worth it? What is that place?
I would say Nevada, Quebec, those Australia. Well, depends. Yeah, I would say those two, obvious, and Scandinavia, Finland.
Yeah. Have you noticed any changes in government attitude towards permitting, granting economic assessments over the last 5 to 10 years? Let's narrow it down to 5 years. There's been 2 changes of government in both Canada and the U.S. in the last 4 years.
Yeah, certainly since 2 years ago, permitting seems to, on the whole, gotten more, fast-tracked in Canada and certainly in the U.S. Although, interestingly, you still have to go through the permitting process, yet with the BLM or Forest Service, the people that were in charge of permitting, who would be the fast trackers, they've all been fired or left. So ironically, in some instances, it's taken longer because the people are gone, even though in theory it should go faster.
Well, is there something that the industry can expect when it comes to changes in the foreseeable future? Are you looking at any efforts made to changing permitting legislation?
Yeah, it's happening in the U.S. for sure. There's some sort of fast permitting process for drilling, and that has been very helpful. But honestly, I don't track it in that much detail.
Okay. Are you looking at gold or silver miners more right now? Which do you like more?
I've just got a fondness for gold. And the silver is great too, but there's much fewer silver deposits out there, or dominantly silver deposits, and silver is a bit more erratic, both up and down, in terms of the stocks. I mean, I owned Vizsla Silver, made good money on that, and sold half, and then the government, or actually not the government, but the 10 people were killed by narcos. That just crushed the company.
You're a trained geologist. Presumably, you could look at any sector you want. Is there a particular reason you've decided to focus mostly on gold companies right now? Is it because you just think they're better investments, or is that just something that you've created as a niche for yourself?
It's just, it's a personal preference. I mean, copper as well. I think copper is a great play. I think looking forward, I'm going to start looking more at zinc deposits, and certainly nickel, platinum group metals. I think that's a good place to be as well.
Okay. For valuations reasons, or because you think there's going to be a lot of demand for PGMs going forward? I think there's going to be a lot
of demand. Yeah, I think there's going to be more and more demand.
Yeah, copper is at record levels, and it's been there for quite some time. Does that look frothy to you, or do you think it's justified above $6 a pound?
It might be frothy right now, but if I look 2 years out, it's cheap.
I see. Yeah, and a lot of that is on the back of, I'm guessing, the AI build out, the data center build out. If you look at the price of copper, which actually I can pull up on the screen right now and just illustrate that to you before we go. Copper is an interesting chart because in the past, a lot of the copper price has been has moved alongside. Okay, not this one. A lot of the copper price has moved alongside gold. Let me just put gold. Just forget about the actual units for now, but just look at the direction of the charts. But the divergence has been stronger ever since May, and copper actually has followed the stock market a lot more. So I'm going to overlay the SPX, and the green line here, you can see that the green line in copper, which is the bar chart here, have been moving more or less in tandem all year round. This extends into last year as well. Very close correlation between copper, I'm just going to remove gold, copper and stocks. Why do you think that is?
Well, I think you nailed it. It's the infrastructure build out for all the energy that it's going to take to power AI plus everything else. That's a great chart. I think that shows it perfectly.
Okay, good. And you're still constructive on copper and base metals right now, right?
Yes. Yeah, I think so. I think neutral through the end of the year. It's hard to know what's going to go on, but certainly looking further out, it looks pretty strong.
Well, give us a sense of what you're working on and what we can find at Exploration Insights. Are you working on any projects in particular that you can tell us about? Are you doing any site visits soon that we can look forward to?
Well, Exploration Insights is owned by Joe Mazumdar, and he writes the whole thing. I'm just what you might call a senior advisor. We talk a lot, throw ideas at him, but it's all his. And he travels more than anyone I've ever come across in terms of this sector. He was just down in Peru for a couple of weeks, came back with some good ideas on not just companies, but on what's happening there in terms of permitting, politics, that sort of thing. I think two of his letters ago, he wrote a lot about that. In fact, that's what he presented at Rick Rule Symposium. But again, working on the same thing. Abra Silver is one he went and visited a while back and bought because he went on site to see it. I've been doing fewer visits. I was in Nevada twice over the past couple of months, and I'll be in Mexico next month, but that's about it.
This might seem like a very basic question, but I'd like to understand what it is that you look for when you go on a site visit. In other words, what are the pieces of data or information that you need to gather by physically being on a site versus just going on a call, jumping on a call with management?
Well, one of the most important things you get is, what are the people like on the field? What's management like? What's their relationship, and how do they work well with the people in the field? So when you're out there in the field looking at a project, the person who's actually doing the work is walking you through it, talking, explaining what's going on. So that's a big advantage to going to a site visit. And then furthermore, you get a sense of what it's really going to take to build a mine in a certain place. Like you get there, is there a big valley cutting through this, a river in the bottom? I've said this before, is there a church sitting on top of the deposit? Are there local issues in terms of what do the local people care about this being built? Is there a road going to it? What's that road like? Is there power to it? All those sorts of questions you can answer and see right there on the ground.
Yeah. What would you consider a successful drill result? You see company updates all the time with news releases on their latest drill campaign, intercepts. For those of us who aren't geologists, what are we looking for here?
That's a really big question.
Yeah.
To understand if a drill result is good or bad, you've got to understand what the deposit they're looking for actually looks like. And to do that, you've got to know what the eventual capital to build it might be. For instance, if you've got a porphyry project in Kazakhstan, which has great infrastructure, it's flat, electricity is like 4 cents a kilowatt hour, you can a drill hole grading a copper hole of 400 meters at 0.5% is a good result. But take that same result and stick it on top of the Andes, and it's a bust. So you've really got to put all drill results in context of what you're looking for.
Mm-hmm. Okay.
And where it's at, et cetera, et cetera.
Right. All right. I'd love to deep dive into this in more detail with you another time. Maybe we can go through some examples. But for now, tell us where we can learn more about your work and get some more stocks that you like.
Right. Explorationinsights.com. There's lots of free information there. There's videos of Joe and myself that can link there. Go there and take a look. I think, Joe is, in my opinion, the best technical analyst out there in the certainly in the newsletter industry, and I think probably in the industry as a whole. And the letter, you can sign up for a month. If you don't like it after a month, cancel, and that gives you access to everything that's ever been written, including the portfolio gains, losses, what it's done. So you can check it out that way. That's what I always suggest. Try it for a month. If you like it, keep it. If you don't, drop it.
Okay, perfect. Well, let's put the link down below. So do follow Exploration Insights there and follow Brent Cook. We'll speak to you again soon. Brent, it's good to catch up with you. Thank you for your time today.
Thank you. That was nice.
Thank you for watching. Don't forget to like and subscribe.